Welcome to our lesson on net operating loss and capital loss limitations. If you're thinking this sounds similar to a lesson that we've seen already, more so dealing with the individuals when it comes to this, you're completely right. Just like in our prior lesson, we had the computation of tax liability and credits for corporations. We had that for individuals. So too do we have a lesson specifically dedicated to these concepts, but for corporations. You're going to hear carry a loss back X amount of years, carry it forward X amount of years. That's what we're dealing with here. Let's dive into our learning objectives and see what we have. First off, we're going to want to calculate the current year net operating or capital loss of a corporation. Well, you don't know what you can carry back or forward if you don't know what the loss is, so that makes sense. We also want to prepare a net operating or capital loss carry forward schedule for a C Corp. That is hinting very much at a sim, carrying loss back 2 years because it makes sense to, right? We've got a whole schedule of years 1 to 10. Where are you going to apply it? What does it make sense to apply to? Does it make sense to apply, let's say we're in year 3 to year 2 and then carry forward for a various amount of years? That's something we're going to see, we're going to practice. That's very much a heavy sim area there. We also want to analyze the impact of charitable contribution and or dividends received deduction on the net operating loss and calculation of tax for a C Corp here. This is going to be very important as well. The charitable contributions and dividends received deduction, they always kind of sit on the outside as differences. You see how when we deal with consolidated corp returns, that's something as well that sits as kind of like always a trick and a weird thing. So whenever you see whenever you see charitable contributions or dividends received deduction, always kind of have like a ding, 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 red flag, trigger kind of thing going on in your mind. What do I need to know about this and how does it apply and where are they trying to trick me? Because don't you worry, the examiners will always be trying to trick you on this exam. Lastly, we want to analyze the impact of the operating and or capital losses during tax planning. That's kind of just a nice general broad item. We want to make sure we're using these effectively. You can see questions asking, what would it make sense? Do we want to carry it forward a certain amount of years? Well, because maybe tax rates are going up. So if tax rates go up, you will likely have more tax in the future. So yeah, maybe it makes more sense to carry forward these losses as compared to applying them retroactively to the past years when taxes were lower. Something to consider, some food for thought. Let's dive into our lessons and see what we have. Hey there, are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.